Hi, it's Cam the Mortgage Man here, and today we're going to talk about HELOCs, otherwise known as Home Equity Lines of Credit. So, what is a HELOC, and what are the key facets of a HELOC? Well, what we can do with a HELOC is we can use it, and we can take the money from it and invest it, and the interest for investing is tax deductible. So let me explain. Let's say you've got a house worth $500,000 and you've got no mortgage on it, so you decide to get a home equity line of credit for, let's say, $200,000. You take that $200,000 and you go out and buy some stocks or bonds or whatever you decide to buy. Well, the interest cost for the monthly payments, so the monthly interest on that line of credit, is tax deductible. So that's a real win for you on that facet. What else can you do? Use it for a down payment on another property. You may be owning one property right now and have a desire to own a second property, a rental. And again, you don't have the down payment in cash, but you've got all of this equity in your property. Again, we use the line of credit. We use that for our down payment, or that may even encompass the entire purchase. But because this is a rental property, again, the interest is tax deductible. So why would we not use an instrument that allows us the maximum tax efficiency while at the same time keeping the payments at a minimum? Because with a line of credit, we have the option of making interest-only payments. Another thing we could do with it is we could pay out higher interest debt. Let's say you have a bunch of credit cards, some car loans, and some other things, and they're at various assorted rates, and I can guarantee you that the rates for those will probably be higher than what you're going to get for a line of credit. Consolidate that debt, use the line of credit, have one payment, lower the interest costs. Annual pay down privilege on a high rate mortgage. What do I mean by this? Let's say you're one of those folks that took out mortgages a couple of years ago and the rate's around, let's say, 5%. Well, use your line of credit, which is at prime plus 3 right now, which would mean 3.5%. Use that to take advantage of your annual pay down privilege. So effectively, you've reshuffled the money and lowered that rate by 1.5%. Again, a winner for you and savings for you. Assist a family member in a real estate purchase. Let's say you have a son, a daughter, a brother, sister, somebody looking to buy a home. Now, instead of possibly maybe co-signing on the deal, they just lack a down payment. Well, you could use your line of credit, give them a little bit of money, and again, that allows them to get into that property they've been after. So, key facets. A home equity line of credit, if we use the money to invest, the interest is tax deductible. We can use the money on it as a down payment on another property, again, because it's a rental purchase, tax deductible. Pay out higher interest debt. In other words, we consolidate our debts that are credit cards, other lines of credits, whatever, you name it, consolidate it into one, have that lower rate. Annual pay down privilege, take advantage of your pay down privilege on your existing mortgage that has a higher rate, utilize the line of credit with a lower rate, and again, take advantage of the savings. Assist a family member with a purchase, towards a purchase by enabling them to have a down payment. So, those are some of the key facets that a home equity line of credit has. The next step is, you want to learn more? Give me a call. Cam the Mortgage Man, you can reach me anytime. Toll free at 1-877-686-4246, or you can email me at cam@auxiliummortgage.com. Thanks for joining me. It's been Cam the Mortgage Man, and I hope you learned a little bit more about home equity lines of credit.